Hello, good morning. And today we have with us Andrew Sparks, the Executive Chairman of QMines, ticker code QML. Andrew has over 20 years of experience that includes funds management, corporate advisory, and broker to several ASX listed resources companies. I've done a lot of stalking on Andrew, so I won't go too much more into his academic pedigree. So welcome this morning, Andrew. How are you?
Thanks, Jay. Great to be here. I'm very well. In Sydney, it's a bit of a chilly day today, but it's great to be here with you. So
Wonderful. Well, look, Andrew, I'm dying to hear from you today. So first and foremost, could you provide a quick overview on QMines and its copper gold projects in Queensland?
absolutely, I'll just share my screen. QMines is quite an exciting story. It's about 3 years old now. We listed on the ASX in May of 2021. And we've got assets, all our assets are based up in a regional town called Rockhampton, which is just on the coast in Queensland, as you can see in the presentation there. Now, what's great about this particular company is that we've got two key assets here. Mount Chalmers, which has a high grade historic copper and gold mine, and why that's important is it means that there was obviously a very profitable operation, in the past. And the other great thing about it is it's very close to the coast. Okay, so we're 20 k's out of the regional town of Rockhampton, 20 k's off the coast. You can fly. There's 8 flights in and out a day. Qantas and Virgin fly in. It's not 500 k's from the nearest pub, so it's a fun place to be. It's a great environment to build Australia's next high grade copper and gold mine. And also we've got another project there you'll see on the slide called Devlin Creek. Now we purchased the first half of this asset in August last year, and we're going to purchase the second half of it later this year. So it's a real regional focus, and that's for me as a former fund manager and an investor, I think it's really important to have a real strong focus so you can really allocate capital efficiently and really drive value for our shareholders. So that's something we've certainly done here at Mount Chalmers. So I won't get into too much technical detail, but what makes this project really exciting is the fact that, I know this sounds really weird, but it's actually open pit. It's an open pit project. So what does that mean for investors? It basically means that it makes a lot of money. Okay, it's very low on the cost curve, as we like to say in the industry, but it's very high margin. Okay, and we've just completed what they call a pre-feasibility study on this particular asset, and it makes just under 400 million bucks just from this one deposit alone. So it's a really exciting, project. The other thing that's really interesting about this one is the grade is right at the top of the deposit. So again, don't want to get too technical, but it basically means that this will return capital very quickly to shareholders. We'll pay back debt that we used to build all the infrastructure on site very quickly, and it generally means that we should be able to, with deposits like this, we can generate some real outsized returns, just because of the rudiments of the deposit. Now, many of you listeners may know that, as you said right at the start, Gia, this is my third listed company. I've been in the capital markets for a bit over 20 years now. I ran a very successful resources fund.
Yes.
And the one thing I just hated as a young analyst and as a fund manager was just teams that didn't deliver. Okay,
Yes.
So what we've got here is we've got I suppose a business where we really pride ourselves on really moving things along quickly. Okay, and you'll see in this slide here that we've actually pushed out 6 updates to that resource. So we've grown the resource 6 times in the 3 years that we've actually been listed. So that's really important because it gives our shareholders a lot of what we call catalysts, to generate more value. So it's not going to stop there. It's growing really nicely at the moment, but there's a lot more growth to come.
Excellent. Well, look, I know that QMines completed a PFS at Mount Chalmers, demonstrating a really lucrative economics for the project. Can you tell us a little bit more about the PFS results? In particular, I was really quite impressed with that graph that you showed us with all of the deposits actually being at quite surface level, you said.
Yeah, no, that's right. So basically because of the orientation of the ore body, as you said, because it's quite flat lying,
Mm.
it basically, as I said right at the start, it means it's very low on the cost curve. Okay, it generates a lot of money. Okay, and as you can see from this slide here, we've got it just under a $400 million what they call net present value,
Yes.
when you discount the future cash flows back to today.
Wow.
But you can also see that we really have great returns. So you might typically see sort of 20% what they call internal rate of return or IRR. Here we're
Hmm.
looking at like 54% over the life of mine. So we've got fantastic returns for shareholders here,
Hmm.
amongst the best out there. And the other thing that's really important is the cost is actually quite low to build this at $92 million. So it's not going to cost a lot. It's got fantastic returns. We've already got a long mine life from
Yes.
the initial deposit at Mount Chalmers, being 10.4 years. But we really have the best returns, best in class returns of all the peer group in the copper space. So it makes a lot of money, which is fantastic.
I'm excited. 375 market, pre-tax net present value. That's exciting for me. And the fact that you're saying that it's actually a low cost to build, given the fact that we know that the biggest pressures moving forward in the mining sector is actually, construction costs to actually get every mine started.
Yeah, exactly right. I think we're really lucky here that because this deposit was a former producing mine, there's a
Hmm.
lot of what they call sunk capital. Okay,
Yep.
and that means we don't have to build roads. We've already got bitumen roads to the front gate. We don't have to bring electricity in. We've already got electricity to the site. All those great things about having a historic mine that really give us that low capital advantage to be able to generate some really strong returns for our shareholders.
Excellent. Look, maybe we've already covered this, but I'd still like to know a little bit more about the upside potential at Mount Chalmers and Devlin Creek projects.
Yeah, absolutely. So I'll jump through here the slide, and what you'll see on this next page is that
Mm.
we've talked about the pre-feasibility study being on one of our deposits, Mount Chalmers, where the historic
Yes.
mine was in the middle here.
Hmm.
But the great thing is, and don't tell anyone, we the big secret here is there's 5 other deposits here that aren't actually in that mine plan. So without boring the absolute daylights out of you, there's a lot of growth here, and it's not, subject to normal exploration risk and, will they find something, won't they find something? It's all about just incorporating those other 5 deposits into the mine plan now to really generate some stronger returns. So it's a really exciting project for that perspective that, we're very well valued at the moment.
Yes.
Sort of circa 10 or 11 million market cap.
Hmm.
And if you look at our peer group, we're probably, one of the cheaper sort of stocks out there. So, but we've also got this locked-in growth that we're talking about that really provides a lot of upside for new investors coming in.
Excellent. Well, look, I think I am actually going to ask you, look, to sum it up, look, Q Mines has a PFS with some of the highest quality copper gold resources in Australia. And you are right. I just did my research. Your entire market cap on the ASX is actually less than 12 million.
That's right.
Um, and I also know you have 15% interest in this, which is great for us because it means that you have absolute skin in the game and you're absolutely aligned to shareholders. But I'm curious, what do you think about the valuation at at less than 12 million market cap from your experience?
Yeah, look, and this is why, and sorry if I get a bit excited about it, but I've obviously been buying my own stock. As you said, I don't know exactly how much I put in, but it'd be hundreds and hundreds of thousands of dollars. And I'm gonna
15%, Andrew, 15%.
Yeah, there you go. So I'm really, I've seen a lot of things as a fund manager. I saw 6,500 management teams come in over those 5 or 6 years, and so I know what works, and I
Hmm.
know the deposits that generate real strong value.
Hmm.
And being candid, as a lot of your listeners will see, that it has been quite tough in the pre-production copper end over the
Yep.
last 2 years. But if you think about it from a valuation perspective, we've sunk almost $30 million into this,
Wow.
this in 3 years to really push it along quickly. And
Okay.
it's valued, as you say, 11 million market cap today. So if that doesn't tell you it's cheap, I'll be buggered. But the other sort of marker here is the fact that what most analysts or how they would typically value these stories is they would look at about 20% of what the net present value.
Yep.
Again, sorry to talk technical, but our PFS had a net present value of just under $400 million. And so at 20%, we should be really, assuming the markets are efficient, we should really be around, a lot higher, let's say. So, probably around that 60 or 70% mark. So,
Wow.
so it's a screaming buy in my view. And, don't, this is not investment advice, do your own research, but, I'm certainly going to make sure that I'm a big buyer of this stock going forward, because I just think it's exceptional value at these levels.
Excellent. Well, that's exactly what we want to hear, as somebody who is absolutely aligned with the shareholders and our investors. Look, with that said, we're excited to inform our members right now that there is a lucrative opportunity to participate in a placement purchase of Qmine shares at a significant discount in the marketplace. Can you just help me out and provide more details about this placement and why you think this is exactly the right time and an exceptional investment opportunity in the copper gold sector?
Yeah, look, absolutely. I think part of the excitement here is the fact I mentioned before, the valuation is very cheap. Okay, it has been a pretty tough couple of years in the small end. And that creates really, some great opportunities, and this is certainly one of them. The other thing is we've really been one of the few businesses in this, that have been able to progress their business plan with haste over these last 2 years. A lot of companies haven't been able to access capital and all those things, which we've been quite successful at.
Sure.
But because of that, we're really one of the few companies that's actually, very close to, we're certainly marching down that development curve, let me say. So with this energy transition, that's coming, that your listeners will hear a lot about, our view is if we can get this business to be ready to mine and ready to generate cash for our shareholders, right at the start of this next upward trend, this next copper cycle or energy transition, I just think we're going to make generate a lot really strong returns for our shareholders. And so that's why I'm buying. That's why I'm excited about the opportunity. And that's why I think it's really worth having a good look at it.
Excellent. And just very quickly, one more question, Andrew, is so when do you think, without holding you to it, obviously, commodities comes in cycles and it's always important to be preparing for the next cycle. When do you forecast, from your experience, the next swing?
Look, it's always hard to forecast, as you know, but what I would say is that declining interest rates are always good for equities. Okay, and I think especially when you're in what they call the risk end of the market. So with interest rates around the globe starting to turn down, I think you'll start to see this big rotation out of a lot of the large caps, into some of these sort of more growth stocks.
And cash.
Yeah, exactly right. I think that's starting to happen now, and certainly in Australia, there's everyone's got a slightly different view on when that will be. But there's a lot of stocks out there at the moment that have just been really knocked around in this last couple of years as interest rates have risen. So I think there's exceptional opportunities out there like Qmines where you can buy things very, very cheaply at massive discounts to any normal market metric, leading into this rotation that I'm talking about. So as I say, it's not investment advice. I think it's important you talk to your own financial advisors and do your own research. But it really is a great time to be getting set, so to speak, in stocks that you think have a strong growth profile.
Excellent. Thank you so much, Andrew. Look, I have to say, I love your energy. I love your experience. And I think the third factor was the fact that you are 15% shareholder of the company. So for all of our members out there, if you have any questions, we encourage you to email it through to us, info@sharesinvalue.com.au or info@eastcoastresearch.com.au. And we'll put it onto Andrew and his team and we'll field it. We'll pass it on to you, Andrew. Is that okay?
Yeah, that'd be great.
Perfect. Well, look, thank you so much for your time. Enjoy the rest of your beautiful day in Sydney. And I'm sure our members will be in touch with you very soon.
Thank you very much and really appreciate the opportunity.
Pleasure.